Welcome back to Timmy Talks Finance. Today we're going to look at gold and silver. Where are they? So as you can see, we're still in that blow off top that we discussed last week. In gold, blow off top, what I see for a few years, gold is probably not going to hit a new high for maybe 3 to 5 years. So what's going to happen in between that period is some consolidation, some more movements down, some more chop. If you may not like that answer, but just remember the old high was $2,000 an ounce, and this high was $3,500 an ounce. That's a very big move for gold. Okay, if you look at gold, its return per year, it's similar to Berkshire Hathaway. Their performance has been pretty similar. These are not assets that are going to go up 20% per year. These are safe, conservative investments for the long term. And we just had a massive move. So it makes sense that we have a few years of consolidation. This is a long-term investment. So after we had this fake move back up, this was a huge news-driven rally. And now the news has an effect on the market, but the overall trend is what you're going to be looking at for the future. So because we had this blow off top already, this news event was not able to push it to a new high. It came close, but that's it. And now instead of having just a blow off top, we have a blow off top with a double top. So, and not only did we have a blow up top, we had a new low. Now some people could argue, hey, this is going to be like some kind of bull flag, and we're having another move up. Is that possible? Yeah, it's possible. I'm not counting on it. Either that was the top, or that was very close to the top. But I would not be trading this on the long side. If you want to start DCAing into a long-term position, because this will perform well in the coming years, decades, this should be a good asset. Prices will come down and you'll have your time to buy. So just remember, I would start DCAing below 3K. What's a 20% drawdown from the all-time high? That brings you all the way down to this 2,700 range. I think we could hit 2,500. It's hard to say what the exact bottom's going to be. But anything below 3K, that's a solid DCA opportunity. But don't be in any call options. Now's not the time for call options. Gold went from 2,000 to 3,500. If you want to do options, you can look at selling calls or selling puts. If you really, you want to play this with a little bit more risk, you could try buying puts. But the move has been made. It's time to look at other assets for faster money. Slow money, if you want long-term investment, still good. Unfortunately, that leaves silver. We can look at the weekly. So look where silver was, right? This was back in 2011 with this huge blow off top. Look, this was the support down here before it broke through and went much lower, and that support became the resistance in 2020, and we broke above that resistance again. But unfortunately, look how weak this is. This is kind of just it's lost its momentum. It was going up, and then it was going up even steeper, right? And we lost that. Okay, we lost that parabolic move. Instead, we have a rounding top. It's going rounding. And what happens here is smart money starts selling to the dumb money. The dumb money is still buying here. They think there's going to be another move. But what happens is the smart money is just simply selling into all those buys till eventually the retail gets bored and they stop buying, and the smart money keeps selling, and it's going to come back down. It would make sense for it to come back down to this trend level, this trend line, but I would look at below $25 an ounce. Would be some good DCA opportunities. I mean, even below 30 an ounce is still decent DCA. But unfortunately, silver, $50 silver, $100 silver, what people are calling for, it's going to take a lot longer for those numbers to hit. So, anyway, if you like what you see, like, follow, and subscribe. And if you want me to look at a specific asset, post it in the comments.